A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is CPI Live. Today, we're going to cover the latest installation of the Consumer Price Index from the U.S. Bureau of Labor Statistics. We're going to go ahead and see exactly what they believe in. I don't know. I just got asked by Mitch over there in the live chat, Shane, what do you think? What's your prediction here? I think it comes in hot, but how's hot? You know what I mean? We're looking in line with expectations. I think you're going to see a downturn a little bit in CPI, but still the numbers remain very, very high, and that's what I'm going to show you on this live stream. Let's get right out to price action here. Gold, monthly chart for gold. We're really looking at last month's low. That would be probably the trade of the day for me. I'm looking to sell right beneath last month's low. You can see that we're dug in right there. That low is about 39.42.55. I'm looking to sell right underneath there, maybe 39.42 and a quarter, and looking to get that breakout to the downside. I think that's exactly what we need to be looking at here for today. This is a big time level. Remember, when you're trading gold, or if you're trading a commodity, maybe you're trading U.S. oil, something like that, but typically gold's much more sensitive. The key levels are big. Previous days high, previous days low. Previous weeks high, previous weeks low. Previous months high, previous months low. That previous month's low, we're watching very, very closely because we're going to have a chance more than likely to sell there. Is it coming today on CPI? Well, it's about $80 off. I kind of lean towards no. However, we're going to be trading gold on a very short time frame, so we're going to have plenty of action here. I'm watching U.S. Tech here on a 1-minute chart here over on our MT5 platform, a 9 EMA strategy. You can see we had a bid a little while ago. It's performing very well. High risk trade ahead of CPI. So I'm looking to sell gold beneath that low. I like that. This Euro USD trade, not bad either. Looking to buy right above that 38% retracement, that long-term 38% retracement, somewhere right around 113.50, somewhere 113.57, I believe, is exactly where we've got that trade queued up and ready to rock and roll. So that's initially what we're looking at here for today. I think that it's going to be a fun session. I think we're going to do some live trading today. That's for sure. 1-minute chart, U.S. dollar, Japanese yen, 920 EMA crossover. We're going to be watching that one as well. So that sort of sets the table for our technicals. I wanted to get those two levels out there for you. 113.57 in the Euro USD, and then looking to sell beneath last month's low for the spot gold market, which is right around it's off a ways, about $80, but still it can happen. It can happen. So we're locked in and we're ready to rock and roll. So good to see everybody out there in YouTube land. I want to thank you for joining me today. Anonymous, good to see Anonymous. Welcome. Pack up. Familiar faces there. Kirsty, good to see a Kirsty. Fitness motion picture. Gold. Well, we started with gold because everybody loves gold, right? River, hey Shane, hey River, how you doing? Doing very well here. I'm confident you're doing well wherever you're at in the world. That's for sure. Muhammad, good to see you, Muhammad. US 30. You want to look at the US 30? Best analysis. Go-to trades. Or go cow trades. I don't know. Sometimes we lay out all the analytics and we think we've got something nailed, and then it just blows up in our face. That's why we're traders. Traders first, analysts second. That's for sure and certain. So good to see you, Tuku. Welcome. Let's see. Hey, Coach, can't access the stream right here in the trading room. I'm watching Switch Markets on the YouTube channel. Yeah, we should be live. I put it up in the trading room. If it's not working for you, maybe just refresh your page. Potentially that may be the ticket. That's what I would recommend. Bobby Bob, good to see you. Bobby Bob, welcome. What's the expectation for gold, Ferris? I think we're going to fall away underneath last month's low. However, in the short term, we're going to cover that here in just a second. We'll go to the shorter time frames and break it all down for you. All right, guys, let's get cracking here. U.S. CPI Live, that is what we're doing today. We had a trade idea that came out about 3 weeks ago. It was beautiful, though. Sometimes we have to look at these things and not necessarily spike the football, but definitely watch what happens when a market does what you think it's going to do. This SpaceX stock, we took out 150, went right down to 135. That's the institutional open. We should see some compression down here. Don't be surprised if we trade further beneath 135, maybe down to 125. That's probably where I'm going to turn into a net bidder there. I think that is definitely a big-time trade for later this week. Remember, Thursday, Starship 13 goes into space. I don't know if we're going to cover it live just yet. It's aftermarket, so I would have loved to have traded SpaceX during the rocket launch because everybody's watching it, but I don't know that we're going to get an opportunity to do that. We'll see. We'll see how I feel on Thursday, right? MOU is over. That's the big thing that we are definitely stressing on this live stream. The MOU is over. It's wartime. Iran war, live updates. Iran war news. Iran targets shipping in the Strait of Hormuz. The Strait of Hormuz is closed for business, and we are back at war in the Middle East. It does not surprise me. Doesn't surprise anybody. Sort of felt like the MOU was going to be a temporary stopgap measure at best. I don't know what happens from here, but we do know that crude oil is definitely sort of on the bull. So we did want to recap this trade idea that came out a few days ago. We're looking to sell right there, 78.24, somewhere right in that zone. You can see from our trade update right there, 78.24, looking for 77.24. This one, it performed pretty well. It performed pretty well. I'm not gonna sit here and BS you. However, we didn't hit our 100 pip target, and it's pretty difficult to manage these things in real time because we sort of, we live stream and then we put out the trade ideas. And the idea is like, well, we lock them in and we see what happens, right? Well, right there's a perfect strike, 78.45, and then we sold off immediately in the next 30 minutes down to about 77.47. So if you went right from a 48, you got your 100 pips. We went from 24 because we wanted to be aggressive. And the low right there was 77.47, so you only got about, 77 pips, something like that. Still a pretty good trade. I got to tell you, if you took this trade and you got a 75 pip sell-off in about 30 minutes, huge volatility, the level acted beautifully. But when you got that sell-off, if you walked away a loser, I don't have any sympathy for you. I mean, I'm holding out for that 100 pips. Yeah, but you're 75. You're plus 75 in 30 minutes. You've got to at least go to break even and make it risk-free, or you got to take something home for your trouble. Very, very, very important that you get good at trade management. That is what makes that's what makes, I guess, interested traders, ones that survive in the market. Week 29, 2026, we're looking at today's U.S. CPI Live. That is what we are doing here. What do we expect? Well, the officials, they expect CPI to come down. That's because of the fuel. It's headed back up, but the gas prices did come down. Oil came down from those the war of the onset of the Iran war. So we're thinking CPI is going to come down a bit. I got to wait and see. Core CPI in line with expectations. CPI maybe comes down year over year. I don't know. If the CPI does in fact come down, it's because of energy. 100% because of energy. Unfortunately, I'm not optimistic about CPI. This is the raw CPI index. This is what I typically reference, the actual index numbers. And this is just brutal. There's no two ways about this. I've been saying this for a long time. And what you can see that happened in 2020, a lot of people talked about the Great Reset. A lot of people talked about, oh no, the world's over, the world's changing. Don't kid yourself. During COVID-19, the financial world changed, and it may have changed forever. Look at this inflation since 2020. Now, a lot of people are going to say, Shane, inflation's a constant. This index always rises. I go, not like that. Right there, you saw a steady, gradual growth. Wages are beating the inflation back there. And then we hit 2020. The financial world essentially ends, in my view. And you can see that inflation is an absolute explosion of the top side. So what do you have here? We shut it down for the government. Remember last fall, government shut down. And then what do you got right there? Since that government shutdown, it's getting even worse. I don't even know what to say about it at this point. Somebody asked me, Shane, is it hot or cold? Is inflation hot or cold? I go, it's hot. It's inherently hot. So, I don't like splitting hairs. The bottom line is this: the inflation situation's not good. How about that? U.S. dollar, Japanese yen, 1 minute chart. We're looking at that 920 EMA crossover. I think that this is going to be a pretty good trade. If we can get that crossover, that 9 to cross back over the 20 after our CPI number here in about a minute 45, then we're going to potentially have a trade. So I'm looking forward to trading this dollar yen 1 minute. I think it's going to be a pretty good one. Let's get our paper trader all lined up. Okay, there we go. Remember, everything I do here is demo dollars. I don't want anybody saying that I'm a signal provider, because I'm not. I'm also don't give investment advice either. Both of those are big no-nos. So if you're a regulator and you're watching, don't put that evil on me, Ricky Bobby. I didn't do it. No, we're going to go ahead and make some trades. Like I said, everything I'm doing here is demo dollars. Deep conversations about changing that. I know I've been saying that for a long time, but I would like to settle in and trade real money, or maybe even just a couple prop accounts or something, because we got to start having some fun on these streams. We've been very heavy on the analytics lately, and that's fun. I'm more than happy to do that, but I think what we need to be doing maybe is a little bit more trading. I think that may be the ticket. Big thing right here, remember, guys, this right in here, this area, what is this? CPI, yeah, U.S. Bureau of Labor Statistics. You can see right there, increasingly heavy inflation, and that is because of your Iran war, no question about it. So be ready for anything here. Okay, here we go. The number getting ready to drop. You can see the big move right there out of the dollar yen. Dollar yen coming off right there, 162.15. Okay, that's a major explosion to the downside. So what are we seeing? We're seeing what? This is definitely dovish for the U.S. dollar. The Japanese yen putting on a show right now against the USD. Big move. Big move, big move, big candle. That is what we call an account beater. That's one of those. Jeanette, good to see you, Jeanette. Welcome. You've got a nice big sell-off there. So now what do we do? Well, I'm going to look at the number here in a second. The number right now isn't overly important. What's important is that we're breaking down our technicals. Euro USD, did we get to our hot level? Nope, we bounced right off of that. It was earlier today. It looks like our downside support level is going to hold up just fine. And you can see, okay, now we're breaking to the bull. Let's get back over to that dollar yen. Big time movement here. 1 minute chart. So what are we thinking right now? Big dovish move. I'm looking right here at the Consumer Price Index summary. The CPI for all urban consumers decreased 0.4% on a seasonally adjusted basis in June after rising 0.5% in May. The U.S. Bureau of Labor Statistics reported today. This decline in all items index was the largest one-month decrease since April of 2020 when it fell 0.8%. Over the last 12 months, the all items index increased 3.5% before seasonal adjustment. Are these numbers real? CPI came down, decreased 0.4% on a seasonally adjusted basis in June after rising 0.5% in May. It's all about the fuel, guys. It's all about energy. There's going to be a lot of people spiking the football out there going, see, there's no inflation. There's no inflation. There's no inflation. Inflation's not growing. Come on now. It's a fugazi. It's artificial. We had the big bump in inflation when we came into the Iran war, and now what's happening? Well, what's happening is very simple. You're correcting the numbers. I can't wait to see the interest rate expectations. We're going to let that simmer for probably 15, 20 minutes, and then we're going to get in there and take a look at if in fact, with inflation decreasing like this, maybe Kevin Warsh takes those rate hikes off the table. Maybe the U.S. dollar gets smashed, right? So how would we trade this? I mean, of course, we want to cross over here potentially to trade. Let's get out to our 9 EMA strategy here on our MT5 platform. Okay, there was the big move. So basically that kind of number, that kind of CPI figure suggests inflation's coming way down, right? That's going to be bullish for your U.S. tech. U.S. stocks should put in a big day. They really should, just because that pressure of having that rate hike already baked into the cake. Now we're taking that rate hike off the table. What happens? Bullish risk assets. What happens to something like gold? What happened to our gold chart? Let's go to gold. Up and away. Why? Weaker dollar. U.S. dollar right now, we're not going to get our sell. We wanted that sell down there today. That would have been beautiful. We'd have nailed it. What do you have right here? Developing. DXY. Very, very good look at the DXY macro picture. What's happening? We're at the key level. We're at the inflection point. We're either going to tighten and drive this dollar higher and put pressure on risk assets across the board. Hey, even crypto's winning. Crypto hasn't done anything all for seemingly all year. Hey, crypto's winning today. So now you've got compression right around 101.15. This is all about the dollar. It's all about the Benjamins. It's all about the dollar. And right now the dollar is losing market share because why? Because that inflation print suggests that maybe that rate hike, maybe those 2 rate hikes are coming off the board. So resistance right there at 101.15. That to me, that's the biggest number in baseball right there. I mean, that's a big one. 38%. If you do hold beneath that level, I have to believe that this long-term L formation is definitely valid. So something like that is definitely valid. Bearish formation. Trump's inaugurated. Big downtrend. We were expecting rate cuts. Still down in here. Haven't broken bullish yet. We'll wait and see. We'll wait and see exactly how this develops. Okay, let's go down. Let's pull our gold chart again. Really wanted that trade today. Really wanted it. Thought we had a chance to get it. Maybe later this week. 5-minute chart. You can see breaking high. Definitely breaking high. What do we want to do from a trading perspective? What could we do? Well, for me, it's very simple. We would run a Fibonacci retracement sequence. You can see sort of our macro zone. It doesn't really mean anything. 4,075. That's that long-term 50% level that we just pulled up on our monthly chart. So you got a monthly level there. You've sort of got, a bit of that's going to be your CPI bar. So we could definitely run something like this. We go Fibonacci's there. Oh, that's beautiful. We would love this. We would love this. I don't think we're that lucky. I don't think we're that lucky to get a shot at that 4,075 level. But if we got a pullback right now, that's money in the bank. A bid from there. Love it. Lines up perfectly. That suggests that there is a bit of there's a bit of rhyme to the reason. There's a bit of method to the madness. The fractals are in play. All of a sudden, you got a 1-minute Fibonacci that lines up with a monthly Fibonacci. Love it. So what do? We step up and try to trade it, but are we going to get an opportunity here? More than likely not. This market's moving higher. However, let's go ahead. We'll buy 76s. We can even be maybe more aggressive and buy 77.50s. Let's go ahead and take a shot, maybe right in there somewhere. Let's go ahead and buy. Let's go. We want a limit order, buy, and let's go ahead and throw that down. Do we get an opportunity there? Probably not. Probably not. I mean, this market's rocking and rolling to the top side. Do we have a chance? Maybe. 4,096. A little bit of compression at 4,100. Guys, don't forget your key numbers. There it is. 4,100. Let's go ahead and let that simmer for a minute. I got way behind on the live chat here. Is gold a buy or a sell? Buy Pish. Marcin, good to see you, Marcin. Welcome. Is gold a buy or a sell? For me, I would love to buy it right now, but I want to see a pullback. We've got to see a pullback. That's for sure. Let me see. Mookson, good to see you, Mookson. Welcome. Let me see. Gold, bearish or bullish? Bullish, man. Bullish. What's about gold? Bullish them all. ADC, bullish. Mitch, amazing, Mitch. Yeah, I'm not kidding you. That's pretty good. Okay, we got an opportunity here, potentially. Would love it right now. What's my TP going to be? This would be one where I would say you could shoot for the moon, something like that. We're not going to. I'm going to look for a bump. I'm going to look for a bump right up there, probably right around 82. We'll shoot for 85. Should get it. If we're fortunate enough to get filled down there, this is one of those trades that we're going to give a few minutes. Not going to bail on it. Stop loss is going to be dynamic, meaning we're going to manage it once we get in the trade. We'll show you exactly how to do that. I want to see that initial push down. We may be too aggressive here at 77, but I want to be long. If we get a chance to do that, then it may be very, very good for us. We will manage risk, though, of course. 1% to 3% on any given trade. 5% if you're aggressive. 7% if you're a wild person like me. And that's okay. Nothing wrong with that. 7%, remember, if you're putting 7% of your account balance down, of your real money account, it doesn't take very many losses in a row to really, really hurt you. So remember, 7% trade per trade. You lose 3 or 4 in a row, and it does happen. You lose 3 or 4 in a row, you're in a world of hurt. That puts you in a really precarious position. I believe we have a shot to get this. I love this trade. Let's see exactly what happens here. What we're looking for here, the concept is very simple. We're looking for buy-side liquidity with our fractal sort of acting as standing tall as our entry, the reason we get in. Our compelling reason to dive into the market is going to be our support levels here. Now, the fundamentals are playing out beautifully. Could we get whacked here? Of course we could get whacked. This chain is extremely thin down here, but there should be some bids. There should be some buy-side liquidity there, and we're going to have an opportunity potentially, it looks like, to get it right now. I mean, it's coming right now. That would be absolutely fantastic. We're going to switch over to the U.S. Tech CFD here over at Switch Markets on our MT5. We just heard, all right there was the signal. We're going to go ahead and send this one short, one-click trading. Let's go ahead and sell it. Okay, there's your sell. Market sort of blowing up against us. That's okay. We're fighting a bit of a trend, I would say. This is real similar to what we want to have happen with gold. Let's go ahead and let this one sit for a while. 1 minute chart, you probably could extend like that and just bet that we fill in, something like that. Or you could play it extremely tight. You could say, okay, I'm going to put my stop loss right down here, and we're just going to put this in for a very, very, very tight scalp. I really don't mind either approach. Personally, I think fighting the trend, I would just look for this scalp. That would be the deal. I would be looking for that scalp, and if we get stopped out, fine. It's not much money. It's one of those you could take a shot where if we do fill in this chain, then we do get paid off. As far as I'm concerned, 1 minute, 2 minute, it would really have to come down and fill us up now. I'm not so sure that's going to happen, but we'll wait and see how that goes. All right, okay, don't do this to me. Don't do this to me, gold. We are right there. I mean, it's right there. All right, what's the low? What's the low? Low right there is 4,082. We're looking to go at 77. You know, maybe we could maybe adjust our entry just a bit, be a little more conservative, I suppose. We'll go 75.93, 76.43. Let's try something like that. That could be pretty good for us. It's a pretty good trade. We'll wait and see if it comes our way. Back over here, what do we got? Well, coming off a little bit, this 9 EMA. Remember, overbought territory up above that 70 location. In your RSI, and right there was your close, your bearish close beneath the 9 EMA, and now we're just getting a bunch of compressed garbage. You can see exactly how tight this trade really is, though. With a stop loss here, with a stop loss right above our signal bar and a profit target here, this is the type of trade that you need to execute over and over and over again to make any money, because your winning rate probably isn't going to be much over 50%. There's enough juice there, though. Let's see if we go down and get paid off. It's right there. I mean, all you're looking for is a sweep lower. Sort of a tough time to be trading U.S. tech just because we've got the U.S. Open coming up in about, 50 minutes, somewhere in that neighborhood. Interesting, though. Interesting. The way that these nine EMA trades work. Interesting stuff, that's for sure. All right, we're still waiting on gold. Come on, man. We're not going to get it. That's the one. That's a pullback we want. We'll wait and just let this one simmer for a minute. Let me see. Calvin, can we trust the numbers? Absolutely not, Calvin. You're a veteran trader. You know these markets like the back of your hand. No way. You can't trust the numbers for a couple of reasons. Number one, the CPI figures back from I guess May, highly inflated because of the oil prices. Then you get a pullback in oil for June. You know, price goes from 95 down to 68, and then all of a sudden the gas prices come way down. They came down pretty quickly, not as quickly as some would have liked, but still very quickly. In my view, that comparison just does not hold water. It doesn't hold water at all. Let me see, Armand, please now, buy or sell. Well, I mean, we're selling U.S. tech. We're short U.S. tech right here on a very, very tight scalp. We probably should have already been paid off, but this is a very, very tight trade, one that you've got to execute 20 times a day. Like I said, we're looking to buy gold on a pullback. We're just not there yet. Let me see, SGK. Hello. How you been? It's been a long time. Good to see you, SGK. Welcome back. Welcome back to the party. Appreciate you guys dropping in. This is a big event. I'm going to break down more of what it means here in a second. I'm waiting to see the mainstream media and how they pick it up and run with it. I'm interested to see that. I think it could be one of those days where, I mean, there's got to already be a Truth Social post out. There has to be. But, you know, CPI comes down, never, basically. What does it mean when you're back at war in the Gulf? The Strait of Hormuz is closed again. How can you hold these CPI figures? It's going to be tough. It's going to be really tough. You see right there, nice compression, though. Just the market just dries up. A lot of times that's what you see with moving average trading. All of a sudden, that moving average becomes a magnet. You can't really deviate from it. Looks like you're going to break higher. I would expect us to break higher and get taken out just because of that fundamental. We should have gotten paid off on one of those, and now it looks like it's going to go against us and stop us out. We'll see. We'll see how it works. Very, very tight trade, though. Very, very tight. I don't mind it. This is one of those where if you get whacked, oh, well. I mean, you're not losing the ranch. You're not really losing the ranch. That's for sure. That's price action, though. All right, let's get back over to our gold market. Gold right here. Still love the level. Really do. Right there. That would probably be my bid for the rest of the day. Even if we push higher and blow the Fibonacci sequence up, probably bidding that long-term monthly level right around 75s is probably a pretty good idea. Going to be tough for us to lose there. I know that. The question is do we get filled? You know, that's the big thing. Anonymous, I miss gold. Yeah, I mean, we haven't missed it yet. But we're getting there. But we're certainly getting there. This is the one we wanted. We wanted that juicy rebound off of the nice spike high, come right down there and fill us up, and we're in fantastic position, in an absolutely fantastic position, no question about it. All right, let's get back on over here. You can see, okay, there's a 920 EMA crossover. Let's get back to our dollar yen. Okay, this is essentially, you know, what you're looking at. You're waiting for this 1 minute chart. You're waiting for this 9 to cross back up over the 20, and that's going to be your long. So there's really not much question about that. That would be essentially when you would think that this downward move is over. Let's run some Fibonacci's here from the top of the queue. I mean, there it is. That's exactly what we wanted on gold. Right there, sort of your spike. We could bring this down and just make it a CPI range, and that's fine too. You can see it's very tight in there. You could have easily made a few pips on that trade if you wanted to do the entire wave. I don't mind that either. I would be focused on the CPI bar, though, because that is when the volume came into the game. Right there, nice big sell-off, retracement, stagnated right around 38%. Inherently difficult to trade Forex pairs on a 1 minute chart. Inherently. Don't recommend it. If I was trading the 920 today, dollar yen, I really don't care if it rebounds. If it rebounds and goes back up, great. 5 minute chart. This would probably be the one I'd be watching probably until the end of the London-U.S. crossover, the London-New York crossover. Once you get to the end of that, it's going to be really tough. these markets are going to dry up. You see how fast the liquidity is sort of leaving right now. This is one of those things that just sort of happens. We have to deal with it. Big spike of volume steadily going down. You might get a little bit of a resurgence on the U.S. Open. But as far as what we're looking at right now, it's really tough to go against the trend, which is driven by the fundamentals. That's big. That's absolutely big. So just sort of a look at the CPI release if you guys want to see it. I'll go ahead and drop this in the live chat in both the How to Trade community and over on the YouTube channels. But you definitely can see this if you want to read it. Reads like stereo instructions, but you can see right there. Consumer Price Index for all urban consumers decreased 0.4% on a seasonally adjusted basis in June. Interesting. Let's go ahead and have a look. This will be our trading economics view, and there it is. There's your pullback. Everybody's going crazy on Wall Street right now. Oh, it's a pullback. It's a pullback. Okay. Here's what I would recommend. I would say, okay, May was definitely hot. Why was it hot? It was hot because of the fuel. No question about it. Energy. Big rally there, right? And then a pullback. Was this number real? It's inflated. The inflation number's inflated. I know that's genius, right? But it really is. So the question becomes, take a look at this May figure. Okay, let's maybe throw that out. How about the June figure? Very, very high compared to what? Pre-war levels. Theoretically, if these wartime CPIs are truly artificial, then we will see a trend that'll take us probably down in here somewhere over the next several months if the inflation's controlled. But this right here shows you war begins. Boom, boom. Gets bad. Pullback here. Why? Oil goes down. Natural gas is at 2.8. Explain that. Riddle me that one. It's at 2.8. Oil's $80, which, probably isn't the worst. It could be. It could be a heck of a lot worse. Okay, here we go. Getting sidetracked. Okay, here we got a potential move here in gold. Down to 85. Nice break. In any case, what I was saying is your oil right around $80. It's not too bad considering, you're at war in the Middle East. But you definitely need to be watching oil very, very closely. Okay, here comes our trade. All right, we're right down there at 76. We could get this any minute right now. It's like watching paint dry, though. Good trading is boring. I hate to break it to everybody. If you're doing trading right, it typically is boring. Your money management's dialed in. You just sit around and wait for your setups. All right, here we go. 83. Let's give this another minute. But it is like watching paint dry. I'm not gonna lie to you. It's not tradertainment. I heard that the other day. Oh, this trade's tradertainment. You should never take. What's tradertainment? I've never heard that in my life. No, we trade, we make money. We look to make money. We want to win. There's no, I'm going to take this trade just because I'm bored. At least I don't understand that philosophy. Now, maybe I'm wrong. I could be wrong. Faji, good to see you, Faji. Welcome. You're absolutely welcome. All right, quickly. How does CPI impact the Forex? Well, if it's low, you're going to see it's bearish for the U.S. dollar. This is the scenario that we got today. Very, very low ball CPI. If it's high, it's bullish because we expect rate hikes. Right now is low, extremely bearish for the USD. So you definitely want to be aware of that. As far as what can it do, what can CPI do? Right here. No, that's PPI. That's tomorrow. What does CPI do to say the indices? It sends them higher. So basically, when you're looking at like risk assets, I got my PPI slides out. CPI right there. Low, bearish for the USD. A bearish USD does what? It sends commodity prices higher and risk assets higher. So definitely understand how that works. A stronger dollar typically drives commodity prices lower and risk asset prices lower. Why? Because if your dollar theoretically is worth more, which is what would happen if we had a high CPI, if it's worth more, you can buy more of those assets with it. So the idea is that the price of those assets would come down. It takes fewer dollars to secure the same amount of goods and materials, goods and services, actually. So we're still watching gold, like watching paint dry. SpaceX, where's the pre-market at SpaceX? 140. Fantastic. So you're starting to see immediately what that CPI number is doing to the stock market. We're up just modestly. I mean, let's take this down. Let's see if we can get a couple of trades going here. Let's see right there. Dollar yen. We're not going to get anything on that for a while. Let's go to the E-mini NASDAQ futures. Fantastic move right there. Now we're coming off just a bit. Did our U.S. tech get knocked out? No, we actually hit our take profit right there on that 9 EMA trade. Very nice. Risky. playing that tight, with that tight of a stop loss location, very risky, but we did get filled up, so not too shabby on the 9 EMA. Let's go back to this 920 with the NASDAQ. Let's take this down to a 1-minute chart. Okay, so what do we want? What do we want to get accomplished here? I want to buy it. I want to buy it. So if we get our 9, but you can see we're sort of in trouble here. I mean, we're looking almost at like the tops in. I think right down in here, looking to buy that market could be very, very good for us. Very, very good. We're a ways off, though. On the short time frame, something like the NQ, you're probably going to have to wait. You're going to have to wait for that thing to set up, probably after the U.S. Open. My guess is you got to get the cross under. You got to come off a little bit and then get the over. Maybe the crossover going into the U.S. Open gives us a chance to trade with a little bit of confidence. But 5-minute chart, if you wanted to run some Fibonacci's, you could. I would start right there on the bottom of that CPI level, though. I know it's not a spike, but the CPI level is a pretty good indicator of where this potentially could trade. Nice range. Okay, here we go. It looks like it's time to finally dance with the gold trade. I like it. I still like it. Could we get knocked out? Yeah. Do I like it as much as I did back here? No. But we still have an opportunity here potentially to trade. Okay, it's coming our way. One of the things about trading spot gold that really, it doesn't frustrate me, but because I'm sort of used to it, but it does annoy me, is that our fills, given the size of that spread, getting filled properly is a challenge. It's a real challenge. So what we're looking for here is immediate and positive price action. We're going to give this one a little bit of rope because I want to see that. I want to see that macro level. We have beautiful symmetry right there. 4,074.86 on a 1-minute chart lines up perfectly with our monthly level, which is right down there, right around 74. I mean, this is a pretty good one. What happened right there? We didn't get filled, did we? And I just talked about that. The low is 77.35. Let's go ahead and wait a minute. We're looking to go 76.50. I could even take that down a little bit more. I don't like sitting right there. We should have been filled, right? No, not quite. Let's just wait. Got to be patient. One of the biggest challenges, though, with something like a spot gold, depending on your broker, is your spreads. Your spreads can be a real bear. I mean, right now we're looking at about 80 pip spread. That's a challenge. Okay, it looks like it's coming. It's coming our way. The storm's rolling in. Let me see. Mitch, let's see what happens when the U.S. market opens. I agree. I think I can't see these markets not moving higher, but that Strait of Hormuz is a major drag. Right now, the volatility index is down about 2.5%. I just don't know that these CPI numbers mean anything. I'm not down on them. I mean, it's good. It's good to see inflation come down, at least in theory. But until we see 2 or 3 months in a row and maybe see CPI, that raw CPI number come down, it doesn't even have to approach where it was pre-war. I understand that, but it needs to at least have those gains or maybe take 60% of those gains off. Okay, here we go. Not bad symmetry. I'm not overwhelmed by the participation. Like I said, we want that right up in there with the heavy, heavy volume. This one might be a little bit sticky for us, but we're going to give it a go. We're right on our entry point. I mean, right on it. Let's see. Remember, those spreads are an absolute challenge. We should be getting filled anytime, but the spreads are a challenge. No question about it. One reason why I sort of lean towards gold futures, but that's okay. We're trading this spot gold. This is what most of you are trading, so we're going to trade it. Now we are now live. So what are we looking for right here? Well, number one, I don't want the world to end beneath 75, but this is an extremely strong level. The real question is what kind of profit target is viable? The most difficult thing to do in all of trading is decide how far a market's going to go in your favor. Very, very difficult. What we're doing right now is this market is sort of trading, and we're looking for that buy-side liquidity to dominate the sentiment and really drive the market higher. Now, what are we looking for here? Well, 84s, I mean, that isn't out of the realm of possibility. It isn't. Is it a high probability for us to get in and out with a quick scalp? Probably not. Market's going against us a little bit. It's going to go check out 75, and then we're going to see what happens. Now, if this market does break beneath that level, I'm just going to take the loss and move on. Strong level, though. I mean, I really like it. I would give this one a little bit more rope than I usually give them, just because that's a pretty bold level. So the bids sort of defending that 75 level. However, the heat is on. You can see right in here, we've got that very thin chain. So the question is the buy-side liquidity there? Do we have a chance potentially to win? And you can see right there, the sells are definitely winning the game. We're down about, 3-something, somewhere in there. Let's give this a few minutes and let it simmer. What we don't want to do is we don't want this trade just to get away from us. And one of the hardest things that you really have to deal with when you're trading live like this and you're trading something that is in a big-time economic event and a lot of heat in the market. Getting out can be a problem. When do I know this trade's over? Well, I mean, there's all sorts of different barometers I can use. I could use symmetry. I mean, I could even cut it off right there. I could put the stop loss right beneath that 1 minute bar, take the loss and let it go. Personally, I see the fight really developing right around 75. So we rotated back higher. We couldn't get back above 75. That's not a good sign. That is not a good sign. However, let's just wait and see where the bidders are. We've got 5 minutes until the 9 a.m. Eastern. Typically, you're going to see a little bit of you're going to see some participation come in at the half hour. Still about 30 minutes before the U.S. Open. Market definitely consolidating right around our key level, right around that 75 zone. And now we're getting compressed. So in one respect, the compression doesn't scare me a whole lot. However, there's no question about it. That buy side liquidity, that sweep higher that we were looking for to make the easy money, it's not there. We already know that. Why? This is minute number 3 in the trade. We haven't seen it. Now, could a big block order come in at 4,075 and really smash us up to the promised land? It could. What's our best course of action? Right now, we failed twice at 75. That means that the asks are dominating sentiment at 75. What do we do now? It's starting to get a little bit hairy. We can ride it out. We can attempt to ride this for the next several minutes, the next 5 minutes or so, and just see what happens. The problem is that's inherently risky. Right now, I'm getting to the point where really don't like it. Starting to really not like it. We got a bit of a bounce off of 75, right up there to about 76.32, but this area, this zone, did not behave the way that we thought it was. So if it doesn't, what do we need to do? You can start to see the market is creeping down. It's filling this chain in. Where are the bidders going to come from? Is it a good idea for me to stay long right now? I'd start looking for the door. Now, the retracement, I mean, there are bidders in this market. There's no question about it. Gold right now for the session is up about 1.82%. So we are sort of running with the pressure. The problem is our key level didn't really work. 75, that's a macro zone. We should have got more bids there. However, the ranges are big. So if we wanted to sit here and try to wait this out thinking we're going to get a rotation, maybe back up to 85, it is very possible. Very, very possible. Is it probable at this point? In the next several minutes, I would have to say probably no. What do? We have to start looking for the door. As much as I hate to pull the plug on this thing, we got to start figuring a way out of this. So we've got a couple of options. Number one, we can set our stop loss beneath the 4,066 level. Then we're going to have to adjust our profit target up here somewhere so it's worth our risk. It's not a bad thing as long as we can afford it. The other thing we could do is put our stop loss right down here and sort of leave the trade where it is, somewhere right in this zone, maybe 86. Do all this on the fly. You'll notice we have time to make these decisions. Do we make the right decision? Well, we're getting compressed again. I want to hold it. I want to hold it for the next 2 minutes and into that 7 or that 9 a.m. Eastern. That's where I want to start thinking about my exit. So let's go ahead and let it bleed. The problem with letting it bleed is it could get very expensive. Right now we're down 681, 680. Doesn't look good. Symmetry, definitely compressed right around our key zone. We just didn't get the love. We didn't get the kick we needed off of 75. Is the trade over yet? It's not over yet. 512 Eli says hold. Says hold it. Let's wait and have a look. I want to hold it here for the next 3 or 4 minutes. Okay. I mean, that's what we're looking for, but we haven't done anything yet. Put yourself in this trade mentally. If you're not already in it on demo or something, put yourself in it mentally. What just happened? We know we've got fundamentals on our side. We know we're running with the broader trend. The problem that we're having is staying power. Do we have staying power? All right, we're back to break even. What can we do right now? We cut our losses. Everybody goes home. You didn't lose anything now. You're back up to break even. The market is back to our levels, though. This is where we want to see where the bidders are. Are the bidders there? Are the bidders there at 75? They better be. They better be there right now or else we're going to have to get out. Okay, now we're starting to pick up a few bids. This trade's starting to go a little bit positive. What should we do with our profit target? Should we adjust it? Should we bring it down? I don't advise bringing it down. We already took the draw down here. We need to hold it. We need to stick to our guns and try to get paid off for our trouble. Okay, right now it's 9 a.m. Eastern. So we just flipped over the half hour. What do we need to do with our stop loss now? It's non-negotiable now. We've got to put some protection down. If we trade beneath that last low down there, we're going to get wiped. I'm cutting it right there. We need to see bids right now. Now, we've given this trade every opportunity to succeed. Every opportunity. We had the initial, looking for the easy money there, looking for the bounce, didn't get it. We waited this out right here. We waited out sort of this little chart pattern on the 1 minute. We're still in it. Now we've got our protection down. We're not putting it one tick down there. We're going to pad it a few ticks. Give ourselves a little bit of room to work. Is this worth our time? Well, we're looking for about $1,000 up there at 86. If I want to bring it back down to that 84 level, we certainly can. This thing hasn't gone positive really yet, though. Don't feel real good about it. I know the next 30 minutes ahead of the U.S. Open, we're either going to be in or out probably in the next 3 minutes. So we're watching this trade simmer. We're still getting stuck. Now we're starting to break positive. Do we shoot for the top of market structure? Try to make this thing a real winner. Now it's starting to break positive. Now, the number one mistake everybody makes is the same thing. Right now, they go, okay, I'm going to take the profit. I've done it myself. The problem is if you consistently take draws like that and cut this thing off before it pays you, it's going to be really difficult to be long-term profitable. There's no question about it. You've got to stick to your guns. Right now, we've got sort of a 1-to-1 trade going there. In this instance, I wouldn't even care if you went up here and you were shooting for a 1-to-2. I mean, I can get into that. I could say, okay, I get into that. That means it's worth our money. Personally, I'm going to stick to my original guns, which were right around 84, somewhere right in there, right beneath that 85 handle, somewhere right in that zone, and we're going to look for roughly a 1-to-1. So 85, somewhere right in that zone. Now we're getting the kick. 30-minute chart kicks over. Now we're at 9 a.m. Eastern. Now what do I do? Now this thing's really starting to pay us. Really starting to look good. You're up 600. Do we sit here and do we wait? Do we let it bleed? As much as it hurts, you need to. You need to. Do we go to break even here? It's pretty tight. The question you have to really ask yourself is if you're going to go to break even, is it worth it over time? How many times are you going to get stopped out at break even versus how many times are you going to take that initial loss versus how many times do you hit your take profit? That's where back testing, that's where AI can help you. Actually getting in and managing ticks, counting ticks, that can help you. Okay, right now, what's our thought process? We're at 4,082. We're at 83. We're looking at 85s. Should we get out? Should we take it? This may be one of those times where you just turn your charts off and go do something else because this right here is hard. This is hard. I mean, we're up 600 and now we're up only 3, and now that market's coming down. Now it's coming down. It's coming right back down to our level. The question becomes, do we hold or do we take it? We're going to hold it. We're going to play this thing out, but take a look at that swing. If we get knocked here, we're going to lose 860, and we were just up, 600? That's a $1,400 swing. That's not just an $800 loss. That's giving back 600. Definitely got to watch it. Now you're down to break even. Where are the bidders at? Are we going to get any love? Could be in big trouble here. Bullwheat. Oh, bullwheat shootout. Shout out for bullwheat. All right, I'll give you a shout out, bullwheat. What are we doing now? We're down to break even again. The psychology, if you're going to work on any certain part of your game, I mean, I can teach you how to use Fibonacci's. I can teach you how to use moving averages. I can't teach the psychology. Now, if you're the type of trader that's cool with that kind of a swing, that's a $1,400 swing right there. If we lose this, it looks like we could lose. We could definitely lose. Is the liquidity still there at 75? It's questionable. It's really questionable. What do we do? TP now? Well, it looks like we're going to get whacked. You don't think that's a heartbreaker, huh? Now, this right here is why a lot of traders will do this. You'll see a lot of this on YouTube. You'll see a lot of that. They'll go, well, even if we get hit, we still had a 1-to-3 on there. We don't have to win very often. I go, yeah, but I mean, we really should have been paid right there. So what was wrong? 84, let's go right there. Market's coming back down. It doesn't look good. It doesn't look good. Gold might fill up the June 12th gap. I mean, you still have to like gold to the top side for today's session, but right now, I mean, 1 minute trade, probably going to get whacked. That's for sure. Let me see hit and run or see hit and drama. Excuse me. Can you please guide me on that gold dollar? Can you please guide me on that gold dollar? Is going to $4,500 or not with a weak sir? I mean, 4,500 now? It's going to be a challenge. Hold. Eli wants to hold. I mean, it is what it is. We've already made our decision, right? That's our trade. Is it bad luck? If you want to be a trader, get used to it. Get used to it. The market's always going to flirt with your take profits and then reverse. You're going to go through this. Been through it 100 times, 1,000 times over the years. What you have to be able to do is really turn the page. And the only way you can turn the page is understanding your own psychology. That's it. That's a big swing for a retail trader. $1,400 swing. I don't care what anybody's. Listen, they're flying private jets and they're driving around Ferraris and stuff like that on YouTube. Whatever. That's great. But let's get in your own head. And if you're sitting there with a $10,000 account and you just took a $1,400 swing, it's not the losses that get you. It's not the wins that get you. It's the swings that get you. And that kind of swing right there, that's a monster swing. We went right up to 83 and a quarter. We're camped out up there right around 85. The market reverses against us. This is what makes traders old. I mean, if you want to age 20 years and 5, you'll sit here and do this for 5 years. I mean, it will. It'll put the miles on you in a big, big way. So right now, what situation are we in? We're hoping we get some buy-side liquidity. Doesn't look like it's there. If it's not there, do we cut the trade right now? Take a $200 loss, $300 loss? You could. The great traders can do that. The problem is if you cut it right now and the market goes up and hits your take profit, what happens then? This has been a great psychology lesson in this trade. We've been in it for, 10 minutes now? Trying to walk through what's going on in your mind when you take these trades. Are we out of it? We're not out of it. We could still win. Is it worth our time? Maybe. You're talking about making $850 for 10 minutes of work? 15 minutes of work. That's a pretty good paying job. But you got to hit your take profit, right? What do we do now? It's hard. It's really hard. We can do a lot of things. One thing I don't recommend doing, I don't recommend doing that. I don't recommend doing that. I don't recommend doing that. Put that sucker right there. Right in that zone. If you wanted to extend your profit target, I would say you can do that and get away with it. I don't have a problem with that. I really don't. What I have a problem with is moving the stop loss down. If you move the stop loss down, you're going to find yourself backpedaling. You don't want to do that. At least right now, we're kind of on offense. So I'm going to bring it right back down. We're going to stick with our original trade, right around a 1-to-1. I want to be beneath 85, though. I don't want to mess with 85. Okay, market coming back our way. Anybody else getting the roller coaster here? Oh, we're up, we're down, we're up, we're down, we're up, we're down. You know, what does it all mean? Let's let it simmer. We've come this far with it. Let's let it simmer for a minute. Starting to break positive for us. Let me see, Haman. What's the leverage ratio? I don't know what I put on for leverage here. About $1 a tick, so that'll be 500 to 1. Can't get away with that in the States. I was spot gold. We would have to be trading gold futures, but still, I mean, really like that level. It's not performing the way that I was hoping, though, and hoping you find yourself hoping you're going to lose. Still, though, I mean, the bidders are there. They are protecting 75. You know, you're up about 300. I mean, do you take the money now? Theoretically, we could move our stop up beneath this spike low, this swing low here, and look to make this a smaller trade. I'm not going to do that. 1 minute chart, very, very difficult. So we're about 10 minutes after. So we're about 9:10 a.m. Eastern. We've got 20 minutes until the open. We know that this trade is going to be decided probably on the open or maybe before that. Be a very difficult one to keep holding. I'll be honest with you, the longer we're in this, the less I like it. We've got a couple of positive pops, though. We've had 2 opportunities to take money off the table. Let's just go ahead and wait and see how it pans out. That's it. Let me see. It means consolidation. Yeah, I mean, pretty much, Eli. And one of the things that we get caught up in when we're looking at a 1-minute chart is consolidation, right? We start to think that these moves are bigger than they are. They're not. Back it off to a 5-minute chart. Look at what we're dealing with. Looks good on the 5-minute, doesn't it? Looks pretty good there. How about the 30-minute? How small is it? See that? Look at how small that is. I mean, there really is no excuse not to get up there and fill that up. That's 30-minute chart. So essentially what we're doing is we're betting symmetry. We're betting that this bar forms up here as opposed to forming back down in here into that CPI range, which I think is a pretty good wager. But, I mean, we aren't asking for very much at all up there. Maybe we should ask for more. Maybe we should look for a new daily high or something like that and really try to make a lot of money on the trade. For me, I mean, I'm giving you a lot of options because I want you guys to think. I want you to think about what you're doing while you're in the market. That's when it matters. The rest of it, you know, anybody can sit here and use moving averages. Anybody can use Fibonacci's. Being able to read price action and your emotions while you're in the trade is what it's all about. So what's happening now? Market's drying up and waiting for the open. Does that make us vulnerable? In a big, big way, it makes us vulnerable. You're going to see a flood of volume come into the market in about 19 minutes. We want to be out of this thing by then. Is that going to happen? Probably not. You're just consolidating. You need another sweep and a kick higher. Very, very difficult to get right now. That's my opinion. All right, guys, let's go ahead and take a look. That chart's killing me. I'll get back to it. Consumer prices rose 3.5% annually in June, less than expected as energy prices eased. That is the big headline. Remember energy prices. They must have heard us talking, right? You see the consumer price index fell a seasonally adjusted 0.4% for the month, bringing the annual inflation rate down to 3.5%. Wall Street had expected a 2% or a 0.2% monthly decline and a 3% annual level. The monthly drop was the largest since April of 2020. What happened in April of 2020? COVID, March of 2020, April of 2020. That's why I don't believe these numbers are real today. I don't believe them. I'm sorry. I mean, they're what we call a fugazi. We're not comparing normal conditions. The war conditions definitely skewed these. Core inflation, which excludes food and energy, was flat on the month. Okay, that's a good sign. Putting the 12-month rate at 2.6%. The consensus forecast was for respective increases of 0.2 and 2.9%. The easing of prices came from a big decline in energy. Yeah. And an easing in services costs, particularly for housing. So there you have it. I don't know about service costs for housing, whatever that is. We would have to look into it. But that is sort of what we're seeing, the all items year-over-year change, right? And you can see right, 2021, and then what that followed a major spike. And then you came back down, and then we're sort of a little bit of a decrease. Core inflation was flat on the month, putting the 12-month rate at 2.6%. The consensus forecast for respective increases of 0.2%, 2.9%, the May level. So, okay, here we go. Our market broke against us. And this is exactly what, I mean, this is trading. You know, what do you do with it now? I mean, we're sort of pot committed. We just got to take the loss on it. But this trade had a lot of promise. You know, if we wanted to really gamble, we could open up the floodgates. I have no intention of doing that. Because let's say you move your stop loss down here. Maybe you even put it down here beneath 50. This thing could easily fill in that CPI level on the U.S. Open. Your first loss is your best loss. You don't want to be twisted in the wind down here from 4,000 and a quarter when we're long from 40.75s just because there's a big sweep of liquidity, sell-side liquidity on the U.S. Open. You don't want to do that. So as bad as it's going to hurt, we're going to chalk this up probably as a loss, it looks like to me, unless we get another bullish bump. But we got to see some movement here. Notice the Bollinger Bands wide open here off of our big volatility, and now we're just sort of crunching down and getting into a situation where we're probably going to lose. And that swing, you know, the swings are what gets you, guys. It's not the losses that get you. It's the swings. Let me see. 512 Eli, think about the goal for the day and then set the goals. Yeah, I mean, and that would figure into your trade as well. You know, if your goal is to walk away with your 850, you probably just let this one go, and this is your trade. You're going with, I like my numbers. My numbers have held up pretty well for the past half hour or so, 25 minutes, but you can see that things are changing here. And it's really hard. It's tight in there. It's tough. We maybe could adjust the stop loss down, but I just, believe me, over the long haul, just cutting these types of things off is going to put you in a great position. So we'll see. We'll see if that gets a kick higher. But in any case, back to our inflation numbers, you can see exactly what's happened here. So what do we want? June finally brought some relief on inflation, said Heather Long, chief economist at Navy Federal Credit Union. This takes the pressure off the Federal Reserve and allows the central bank to wait and see what happens. The concern is that the relief will be short-lived as the war in Iran restarts. Yeah, we talked about all that. So what does all this mean? It means we've got to go to the CME. CME Fed Watch Index. What now? Give me a fresh read. 84.5% say that we're going to be holding firm. That's down about 10% from what, yesterday? Yeah, yesterday. So pretty good shift in sentiment after the CPI numbers. Let's go to the end of the year. Where's life at the end of the year? What do we have? That distribution starting to skew a little bit to the left, but not really. Now we're starting to say maybe only one rate hike. Still pricing in about what, an 80% chance of at least a 25 basis point rate hike? Something like that. It's interesting stuff. I mean, essentially what happened was it really tempered our expectations for maybe 2 rate hikes or 3 rate hikes. Still, a lot of folks believe that maybe only 1 rate hike and we're done. I think if you get another set of CPI figures that come in extremely positive, potentially that may come down even further. All right, guys, we're getting a bullish bump here from our support zone. Let's see if we can finish the job this time. We've come up twice. We've got after it twice, and we just haven't quite got this trade to do anything really for us. It's been frustrating more than anything. This is trading, though. Bollinger Bands go from wide open to very, very tight. That signals consolidation, as we just heard in the live chat. The real question is do we kick higher and get our money or not? Psychologically, we've come this far with it. So in one respect, like Eli just said, think about your goal for the day. What if your goal is only a couple of $100? What if you're shooting for $250 or maybe even $185? I guess you could meet your goal right now. The problem with that type of thinking is you already took the massive draw. I mean, realistically, we already took a draw that was about $600. So we need to be getting paid. We need to be getting paid for our time here. Remember, that initial risk, just because it didn't get us doesn't mean we didn't take it. We took the initial risk. So we've got to be in a position here potentially to get this kick higher and see if we get paid off. So right now, we're holding. We're holding. Let me see. HM, your fund. Sorry, Bull, I don't follow you. HM, your fund. Do I run a hedge fund? No, I don't run a hedge fund. In your ACC, I have no idea what that means. Oh, in my account. Okay. HM in my account. I don't know what is HM. Got a lot of crude oil in it. And see, there's your retracement. So the good news is the buyers are starting to win here, but it's fickle. It's really fickle. We're not getting the follow through to the top side we should easily get. With ranges this big, it should not be a problem to trade up to 4,084. I mean, these are big ranges. And we're just sort of consolidating right around 75. This one's going to depend on the U.S. Open. You're either going to get a positive break or not. That makes it a gamble. We're in gambling mode. How much is in my account? Yeah, I'm not telling you that. Which account? Got prop accounts. I got live accounts. Which account? This account here is demo dollars. So I don't know. There's like $5 million in there. For me, though, personally, my account balance, I don't like talking too much about it. I will tell you that I go in incrementally, though. So at one time, there's not more than 25 grand in the account. We're not influencers here. I'm not going to sit here and tell you I'm $1 million trader because I'm not. But I believe in being smart, incremental with the deposits into the account. There is such thing as counterparty risk. And when something bad happens to the brokerages, you got to really watch yourself because you're the last one to get paid. Basically, you have to file a lawsuit and stand in line with the other creditors. Not a good feeling. When I first broke into the market, the trading group I was with lost money with MF Global. When MF Global crashed, futures broker here in the States, that was about 2010. That cost $50,000. Oh, don't worry, you're going to get your money. Nobody gets their money. Partial payouts at best. That was a $50,000 loss for the trading group. So that was something I always recommend is stay within your means. Yeah, I have several funded accounts, Bull. Several funded accounts and live market or my real money accounts. I prefer trading real cash over prop. I do. I like being paid for my time. The easy thing about prop, though, is if you're in this trade, you just let it twist. Who cares? It's their money, right? That's the way. Let me see. Is it gold futures? No, this is spot gold. Gold futures. We can get to gold futures here in a second. But it looks to me like we're gearing up for the U.S. Open about 10 minutes away. Let's go ahead and take a look at maybe something going on with our NASDAQ. Okay, here's the NASDAQ. This isn't really a good sign for gold. That means that U.S. dollar is giving up some of its puff. NASDAQ coming down and filling in that CPI level. Something like that is interesting. Maybe you get the cross under and go short. But yeah, now we're starting to break here in gold. Yeah, we could be in trouble, guys. We could be in trouble. U.S. oil, another big drag on the equities markets. You're in something fairly bullish here. Remember, we just talked about this area right in there, that 70.85 or 70.50 zone, 78.50 zone was big for U.S. oil. Potentially, maybe a pullback bid from down there, but I don't particularly care for it. WTI, Augie WTI futures. If we were looking at this going into the U.S. Open, just very tight, extremely tight. So for me, I'm looking right there, probably at that top. Just a really, really tight type of a session here thus far. You see volume sort of kicks up right in this zone. There's your CPI volume holding. We're probably going to get another rush of volume. The question is do we move higher or not? WTI crude, I wouldn't be looking to trade this yet. I would be waiting for later in the day. We can do some market profile stuff then. Let's go to a weekly here. The weekly chart for U.S. oil has been a big deal for me. I've been watching this one relatively closely for a long time. The oil markets have gone pretty well for us. We went down, checked out that opening war gap, had a beautiful long there, had a pretty darn good short right up there from 78.25. And since then, we sort of moved higher. We broke above that 38% level, and now we're sort of churning. Key level of resistance, probably 82. I hate it, but 82, 50%. I'm not a 50% fan at all. But it does coincide with our 13-week EMAs. It's right out 82.16, and that zone potentially could be a sort of our next port of call. I would be looking at 82s. 85.56 is a great one. That would be the resistance zone for me. So if I was looking to get anything done today, I would be looking to do something like this. Probably a short, right up from 85, and with the right type of news cycle, then we'll get it. Let me see. Gold is moving. Yeah, it's not moving far enough for me, Eli. We're going into the U.S. Open. We're officially gambling on that one. We're at 4,080 here, so we're starting to get a little bit of price action, but right there's your hammer. I mean, that right there's good. Long-legged doji and a hammer. So psychology check. What do we do now? Don't kid yourself. 8 minutes away from the U.S. Open, we're playing this market very, very tight. What could happen? We could easily see a reversal. Or we could easily hit our profit target. This may be a situation where you extend your profit target. Look for the top side. Look for 92. Something like that. Still, though, we're in the ballpark. We're in the neighborhood. Okay, we've broken above 80. I like this. I'm beginning to really like this. We're sort of looking at those pipe tops right there. That will be sort of your liquidity sweep. If you're a 1 minute market structure trader, all right, this market looks like it's starting to break in our direction. Are we going to get an opportunity here maybe to get filled up? Potentially. Right now we're up 676, 708. I mean, we've come this far. We just got to ride it out. And this is the hardest part of trading right here. Okay, there's our break. Okay, we hit our take profit and we're out. So that was the longest trade in human history. We started breaking that sucker down right there and talked all the way through it. Very good psychology lesson, though. So the real question now is, did we pull the plug too soon? You want to know the answer to that one? Who cares? It's over. We made our money. We're out. And we're out before the U.S. Open, which I really like. Euro U.S. dollar, would have loved that bid down there. That would have been sweet. We didn't get it. Great Britain pound, U.S. dollar, Japanese yen. We had a question right there, dollar yen. And then we're going to close with the Aussie Kiwi. We had a special request for that one. Daily chart, you can see very, very compressed here. Dollar yen, good volatility. But, you're still looking at those highs up around 163. I really love this market over 162, but we didn't really get the follow through. About as high as we got was about 162.71. We're talking about 165s potentially. This was a big-time bearish move. So we definitely have to back off on our time frame and go to maybe a weekly. And even there, you can see that the market structure sucks. It really isn't any good. So what happened here? Compression around 162. So if I was going to turn on a TPO chart, which we're not doing that. That gives you the wrong idea. Don't use those on Forex. You don't know the volumes, that's why. Spike low, spike high. You know, the pullback zone right there is easy. 160. Swiftly. 160 swiftly. That's exactly where you'd be looking to go from. The problem is we're way off it. So I could go to a daily. Let's go to a 4-hour. I'm just not even remotely interested in any of this. If you guys wanted to do some, I would say creative market analysis, you could do something like that. Lower trend line. I'm not real big on trend lines, but you can use them. There's your first touch. Made a video, 3-touch reversal a while back. Nobody watched it, but it was pretty good. This area right in here, I would consider that a touch. 2, 3, fourth touch. So what would the trade be? 2 options. That would be the first one, would be short on your 4-hour bar close beneath that trend line. Second one would be long. Long would be right from here. If you were going to go long, you do something like that. Stop yourself out underneath that trend line. You could do it. If I was doing it, I would be looking for the trend line reversal. A lot of times you get much better follow through on those. So wherever this bar is to close down here, then you would just be looking to get maybe a retracement like that. Stop yourself out up there. Sort of a position trade. 4-hour chart, though, we definitely could be looking at the trend lines. It's not bad. Not bad. 512 Eli, nice trade. I don't know, man. I'm not really too into those trades. I wanted it right there. I wanted it in and out. The market smiled on us, though. So we've got 2 winners. 9 EMA on the U.S. Tech. That was beautiful. You remember that one? Seems like a lifetime ago, but it was there. Really a nice scalp. Probably should have taken a position, right? All right, let's go ahead and take a look at a few other things here. Right before the U.S. Open, Aussie Kiwi. Definitely wanted to highlight this one. This was a request from a trader in the How to Trade community. You see a couple of things that I would definitely stress here. Number one, you're in a downtrend, no question. Aussie Kiwi. Something like this. Spike high there, spike low, pull back 120, 50-ish would be a great sell. Right in there would be a great sell. The market is down, though. No question about it. So your trends are down. Your daily trend's down. I like it. I like selling pullbacks in that situation. If you do want to take a look at the weekly, and you want to be more conservative, you got really beautiful market structure here. Although I really like it. Nothing wrong with that at all. If you were, wanted to wait for probably a superior, 120.61 would be sort of your short. But big picture, are you going to get that anytime soon? No, you are not. So what else can we do? I can draw you a great big useless Fibonacci level if you want. And you can wait the rest of your life for 116.90. Big picture, I like the short. What I would be looking at here, if I was aggressive, 4-hour chart, got some hammers showing up. Something like that from that spike high to that spike low. 119.76-ish. Do you want to sell right there? I don't. It's already been had. Go to your daily. I would back off to the daily. Something like that. 120.50. Not bad. Gold. Well, I mean, how do you want to trade gold? We already traded gold. I'm not getting in another gold trade. We bought right down here, and we sort of rode out some really ugly price action and then came up and just, man, that thing was a nightmare. That's what puts the years on you as a trader. I mean, like I said, if you want to age 20 years and 5, take trades like that, do trades like that. Pretty good stuff, though. You can see we definitely rotated higher from our entry point, which was about 75-ish. So if you're asking me about gold, to me, CPI level, you could buy it again. I'm not even going to do that. No way. That is saturated. I probably would be looking to the short side underneath 75 now, just because you're definitely probably going to challenge that CPI level. Very good chance of that. Okay, opening bell, ding, ding, coming up. What happens? What happens here? Let's take a look at a few. SpaceX trading right around 140. NASDAQ, E-mini NASDAQ futures. All right, let's go right there. I don't love it. Let's go down to a 1-minute chart, see if we get any action on this 920 EMA crossover. Been pretty good scalping, really. Okay, there's your open. 920 looking to set up, sort of choppy here on the open. What do we have? Dow Jones Industrial Average down about 150 points. The S&P 500 about flat at 10, and the NASDAQ's the big winner, up about 1%. 29.5, but selling off quickly. What's happening to our beloved gold? It's coming down a little bit. A little bit of action hitting that spot gold market, coming down to about 82, but still there's support there. There's bidders there. That's a good sign if you're still holding those gold longs. Let's take a look at U.S. oil. What's happening with U.S. oil coming off of those daily highs right around 82, or excuse me, weekly highs up at 81.27. Let's take this down to say, you don't need a 1-minute chart. Let's go to a 30-minute chart. Okay, so sort of a reversal on A period. Rotation. This is ugly. This is ugly stuff. I mean, you're right around 3% there, plus 3%. I would have a real problem shorting WTI on intraday time frames. You could probably take a shot at a short up there at 82, just beneath 82. You'd be all right there. In 85, right beneath 85, you'd be okay there. But you're not taking positions. You can't do it with this news cycle. You absolutely cannot do it. It's developing too. It's too hot and it's too heavy. So right there. Okay, let's take a look at an oldie but a goodie. Let's go E-mini S&P 500. Everybody and their kids and their parents are trading the E-mini S&P 500. Let's see exactly where we're at. Okay, beautiful spike high, and now we're starting to see it. This is what scares me about gold today. This is what scares me is we could definitely fill in that CPI level, and you're starting to see that really develop here. Real compression, nice big run up, nice big tail compression here in the E-mini S&P 500, and now you're coming off. Let's turn our TPO charts on, time price offering charts. Okay, point of control, extremely risky trade. This time of day, value area high, value area low. All right, S&P 500 opens higher after light inflation data, but gains are being erased. Yeah, I mean, this is a tough one. I think that the markets are smart. They know that these numbers are fake. Okay, so right here, if you're looking at the E-mini S&P 500, is this a worthwhile trade? I mean, the throttle's open right now. I mean, we're bouncing around. We're trading. It's right after the U.S. Open, 2 minutes. Do we want to buy an overnight point of control potentially right there at 59? 79.59, somewhere right in there, 58, so 75.59. Okay, that would be the bid. You'd be buy limit right here, exit. This would be extremely tight. This would be an extremely tight trade right here on the open. That would be what, about 5 ticks? Stop loss price. We're not going to do 25 ticks. Okay, let's put the buy right in the queue there. Let's see if it gets us queued up. Where is it? You get this a lot around the order, or excuse me, right around the market open. A lot of times these things don't place them for a minute because there's so much volume there. Come on, let's go. Buy limit. Right down there. Put it right in there. Yeah, they're having trouble placing the orders. SpaceX at 141. Okay, so what we're going to be looking to do here, we're not doing that. Let's go to a 1-minute chart. One contract, this would be what we call a pop. This would be a quick pop right off of that point of control. Very early in the day to be doing this. That's why we're playing it so tight. Absolutely playing it tight. Why would we play tight? Early in the session, like real early. If you're interested in scalping during this time of day, you can do it. I'm not saying you can't do it, but understand that there's no reason to take a position. You don't let these trades go against you. You want to get in, you want to get out. You want to get in, you want to get out. So that mammoth gold trade we took, we were just in for about a half hour. We're not doing that again. If we take a $62 loss, think about where we're at on the session. All right, we hit 800 on the gold. We hit a little bit on that NASDAQ trade. I don't know what that was on the MT5. But right this minute, what are we really looking to do? Think about it. Market just opened. We got a whole day of action here. We got another, 5 hours? Well, more than that, 7 hours of action. There's no reason to rush in and take a huge position right on this open. We are 5 minutes into the trading session. 5. Now, if you wanted to take a position for the day, you don't do it on something like a TPO from the overnight. However, there should be some bids there. Let's back this up and look right at that TPO chart, 30-minute time frame. 30-minute time frame, there it is. There's the point of control. Beautiful. There's your bell curve. You know that's a demand zone. Now, the real question is how does price react once we get into the market? Well, I mean, that's the million-dollar question, right? Let's look at our trading dome for execution on this one. You can see we're still down the queue a little bit, but that's our trade. That's what it looks like. Profit target, stop loss. 1-to-1 risk versus reward, very, very tight. Very, very tight. Now, if you want to take a position for the day on something like an E-mini S&P 500 or an E-mini NASDAQ, seems like everybody's trading the NASDAQ these days. If you want to do that, you wait for something like the opening range breakout. You wait for your 15-minute orb to set up. You know, you wait for those two bars, a little bit more evidence that gives us a range to work with where we can go long or short for the rest of the day. So let's take this down to a 1 minute. I want to see this action firsthand. That's the trade. Let me see. A buy day. Eli likes it buy day. Let me see. Con, William, gold, buy or sell, sir. We already hit the buy on gold. I'm leaning towards the sell, but I wouldn't sell it above 75. You want to wait. If you're going to sell gold today, you got to sell it underneath 4,075. Let me see. Con Pigeon. Good to see you. New name. Good to see you guys. After the Fed chairman's speech, market goes upside or downside? Who knows? Absolutely, who knows? Who knows? Definitely tough. Warsh promises inflation will be a thing of the past. Cites the benefit of AI investment boom. Gold. A lot of questions for gold. Well, I mean, this is the game plan for gold, guys. Very simple. I mean, we rotated back up. 75 is held firm. You've got to trade beneath 75 or you sort of have to be holding long still. I'm not. We're already out. If you're late to the party, we're out. It took us forever, but we're out. Right here, though, you probably are starting to shift your idea of your market sentiment towards gold if you trade down beneath 75. If that happens, you're going to look to fill in this queue down here, this really thin chain that developed during CPI. To sort of illustrate the thin chain concept, that's gold futures. All right, boom. TPO, 30-minute chart. Where's the volume at? Look at this. Look at this. You're extremely vulnerable down in here. Extremely vulnerable. He's got a signal. All right. Got a buy signal? Really, a buy signal on U.S. Tech? Send them. Let's see what happens. Okay, so there's the bid. 9 EMA strategy. This one's a pretty good strategy. Stop loss. We're just going to keep scalping tight here, guys. Definitely not going to try to pick a position here, but this is more of what we like. That's more of what we like to see. We're getting with the fundamentals. You're definitely looking for stocks to potentially rally here. This is a pretty good one. U.S. Tech CFD over on your Switch Markets MT5 platform. All this is you can have all this system if you want it. It's over there at Switch Markets 9 EMA strategy system. I built it. The 9 EMA. You've got a custom EA. You've got all sorts of PDFs and instructional videos on how to build the EA and how to install it. But something like this, I mean, we're rocking and rolling to the top side. You're pretty good trade. Pretty good trade for U.S. Tech. Now the question is do we hit our take profit or does the market sort of trade down a little bit? I don't know. We're going to wait and see. I'm coming back down. I do like the take profit location, though. That's roughly about a 1-to-1. So definitely you're still in positive territory. The bidders are there. The bidders are there 10 minutes into the session. We should get that filled up. I mean, it looks positive to me. Nice candle here. Really like that crossover. After a little bit of compression there early in the session, the markets are definitely starting to react to the top side. All right, Dateline, CNBC. Warsh promises inflation will be a thing of the past. Cites benefits of AI investment boom. Interesting. Kevin Warsh on Tuesday, in remarks he delivers to Congress this week, vowed to defeat inflation and get monetary policy right. Well, that's noble. And we've already done this dance with gold. Goes up, goes down, goes up, goes down. While he promised to tackle inflation, the central bank leader said the economy is in otherwise solid shape and will reap the untold benefits from the artificial intelligence investment. Bobby Bob, Great Britain pound JPY, absolutely. Yeah, guys, we've got a few requests for markets there. I'll cover the dollar, Swissy, and the pound guppy here in just a second. While he promised to tackle inflation, the central bank leader said the economy is in otherwise solid shape. Here's the quote. The members of our committee have no tolerance for persistently elevated inflation. Damn it. And we share a resolute commitment to restoring pricing stability. Well, God bless you, Kevin. That's your job. Remember, the Fed has two jobs, promote pricing stability and promote maximum employment. So interesting trade we have going here. All right, guys, we got a couple of requests. I'm more than happy to look at your markets. We're going to let that one simmer. I think we got a great chance to win, though, to be honest with you. I did want this pullback right down in here, and we didn't get it. Market's out of here. Scratch it. Definitely got to scratch it. That market, that trade right there is gone. All right. SpaceX back from the dead, right? Tight scalp. We'll see how that one pans out. All right, what are we looking at here? Gold, please. Well, gold made the move, right? Moving higher. This is the question, guys, for gold. This area right here. That's the question. In one respect, you are starting to show a little bit of bullish price action, which is great. But if this trades up in here for a while, that's a textbook B formation. And what happens in Bs is eventually they fill in that gap area. It's a good trade to the long. We did pretty good earlier today on that long. As far as what can we do right now? Let it set up. Let it set up for another hour. SGK. Do you think Warsh will be a Trump puppet and lower interest rates like Trump has been demanding since forever? Yeah. Eventually, yeah. I just don't know if it's coming this year. IBM stock craters 23%. That's no good. Oh, God. Look at that catastrophe. Whoa. It's not a gap. Well, maybe it's a gap. Let's see. When was the last time this area was traded right in here? May 21st. It's not quite 60 days. I wouldn't call it a gap. But IBM having a bad day. Having a bad day. All right, E-mini S&P 500. So we're going to lose our NASDAQ trade, right? Yep, U.S. Tech. We were there, guys. We were there. Now we're going to get hit. That's okay. That's a really tight trade. Not too worried about losing $50 over there. All right. Let's go back to our 30-minute TPO. That's the one we wanted right there. Didn't get it. Let's go to the Dow. Dow explodes to the top side. Yeah, we sort of figured this was coming. NASDAQ right there to the value area high. Interesting. Let's let those simmer for a little bit. Let's look at WTI crude oil, though. Right at the point of control is about 80 and a quarter. This is ugly, ugly stuff. This is ugly. I mean, I kind of favor the short side of the market here for WTI, just because you do have some serious issues jumping all around with the news cycle. Point of control, I would let that set up. That's trouble. Okay, let's see. We've got a couple of questions here. Let's see. U.S. dollar Swissy pulled back to the Fibonacci on the daily. Yeah, let's go ahead and take a look at the dollar Swissy. Daily chart. Love the daily chart for the Forex. Dailies in 4 hours. Those are the ones that I really fancy. That's for sure. What do we have here? Big move. Number one, big move. That's sort of a crater job for the Swissy, off about 1%. What does that suggest? Suggests that we are bailing, and I mean bailing, out of our interest rate expectations, or our rate hike expectations. So what do we have here? We've got a situation where we could call it a Fibonacci. I would back up. If I was doing it, Vinman, I would back up to probably a weekly just to see if we've got a level. Okay, we really don't have a level. I could look at a monthly. It's not going to do us much good, but we're going to do it anyways, just to be consistent. Spike low there, spike high. You've got a 13-month EMA right there at about 80.29. You've also got 38% right around 80.05. So, I mean, that is sort of that's going to be our hot zone, in my opinion. You're looking at about 80.25 to 80. That's where your robust support's going to probably line up and go for it. That would be probably my long side entry. Definitely want to be looking at that. So 80.75. Now, as far as what you know, for the daily chart, you know, I like the aggressiveness on the daily, 4-hour charts, daily charts, whatever. But consider this. That is a really small wave. So if you're looking at Fibonacci's 80.57, maybe 80.50, I think it's way too tight to take that trade. What could we do? This time of day, 30-minute chart. We know we've got our bids down here. That's where we want to bid. What can we do with our price action? Well, there's your CPI range. So you could just look at this current wave, run a Fibonacci from there to there, potentially get a sell right there at 80.88, something like that. How about a 5-minute chart? Looks a lot like our gold, doesn't it? We'd say it's a descending triangle, potentially. I wouldn't get involved in this. It's very choppy. I don't like it. This right here, 80.88 though. I think if you wanted to make a trade, that would be the trade you would make, potentially. Let's bring it down. Let's get more aggressive here. Let's take it right down to our CPI level. Yeah, that's more like it. But that was only a 6-pip difference. So, you know, you're a net seller from 80.82. You're a net seller from there. That's for sure. WTI crude oil falling away. I would be careful down here. You could see a major washout here. All right, let's go. Great Britain pound, Japanese yen. Let's do it. No, I want WTI crude to stay alive on my screen. Great Britain pound, Japanese yen. The guppy. Five-minute chart. Who cares? Good move, but I mean this right here is what you need to be looking at if you're serious about trading this pair right now. I'm on short time frames. This right here. What is that? It's a rectangle. Take a look. Why is that one important? It's your CPI range. Believe it. So what do you have happening? Why would CPI send the Great Britain pound Japanese yen reeling? Institutional traders diversifying their holdings. They started piling into these other currency pairs when CPI came out. Sideways trade. There was your bid from the bottom of the range. Now what do you think we could do here? We'd sell the top of it in the next hour and a half, 90 minutes. You sell from right up there. 217.40. Be looking for probably a 10-pip payoff, something like this. Where you run into trouble on one like this, Bobby Bob, trading it on such short time frames, is look at your spread. Your spread's like up around 4. That makes it really tough. It makes it really tough to get a trade that's got any sort of, I mean, it's really not worth it. That's what I'm saying. Because you'd have to stop yourself out. If the market did break, you know, you've probably gone up there at 217.52. So that means you're going to have to shoot for something more like this, 217.19, somewhere down in there. And the odds of hitting that are a little bit lower than just taking a real quick scalp. However, I mean, that really is the top of the session. It's the top of that CPI. So it worked like a charm down here. This would be sort of like a pendulum trade. You could execute that and not feel too bad about it. As far as, you know, what can we be looking at on the longer time frames? I mean, see all the work we did. Let's go ahead and get rid of it. A couple of things. Daily, right from that spike low to this spike high, failed right around 38%. I'll be looking at 216.75s as being a potential late day long. I think that could be very good. Very good. Not a bad trade. I'd be patient, though. I wouldn't pile in right now. I think I'd be more inclined to sell towards the top of that CPI range and potentially buy it on there about 216.75. I think that's definitely something we could be looking at. That's for sure. Interesting, though. 218. Nice market. Not really a nice market. I mean, we want the bigger levels, though. We want to see a bigger pullback but we're probably not going to get it this week. So we'll just wait. Still, though, really rock solid support zone. Definitely been a demand zone, 216.71, something like that. Pretty good stuff. All right, WTI crude, just really tough to trade that today. IBM, let's take a look at IBM and their 1 minute chart. I mean, that is just brutal, isn't it? Open gap down and then move sideways. As Forex and CFD traders, we don't have to worry about the gap down action. Let me see Actara. Good to see Actara. Thoughts on Bitcoin? Well, I mean, this is sort of our investment idea. We were looking at 58.5, 60,000. We were talking about 60,000 sort of being the line in the sand. So you're up at about 63, 780, somewhere in that zone. Very important. Absolutely very important that we understand that technical level and what it means to this market. No question about it. If you trade beneath 59 and 60,000, you're going much lower. I would have it, right down there at 50,000. I think you fall away really quick to 50. If you do trade beneath 60, that's huge. And then also 39,000 down there. This would be probably my institutional buy. If you said, Shane, where do you think Goldman and Sachs and JP Morgan would buy this market up? They already own a lot of it, but where would they buy it? 39, 40. 13-year EMA is at 38.8, 78% of the massive run up here, right around 39,000. I mean, that's a big deal. So this zone right in here, probably looking at a bid. The bid, where I would be backing up the Brinks truck looking to unload on Bitcoin. As far as this level right here, this has got to be your line in the sand. I mean, if you trade beneath that 57 level, 59, 60, you're going to trade down. So the real question is what happens in the short run. We could pull up our daily chart. We had a trade idea down there from not too long ago. Really turned out to be fantastic. And you can see something like this where we sort of stagnated and then we rotated higher. What I would be looking at on the daily probably is just bidding 58s again, 58.5, somewhere in there, 59.7s. Definitely could do that. Bollinger Bands are parallel and they're tight. That means that the market's really drying up and slowing down. As far as I'm concerned, this is one of those markets that I would be sort of on the sideline right now. I'm not impressed by anything happening in crypto. Today's been a pretty good day for Bitcoin, but look, I mean, you're just trading inside of this just brutally tight range. So for me, doesn't blow me away, doesn't blow my hair back, what little I have left. Calvin, just in, IBM crashes 25% at the open. Yeah, we were just looking at IBM after reporting lower than expected earnings. IBM, I mean, that's the story of the day. And you sit around, you talk about quantum computing, you talk about AI. I mean, that right there, Calvin, that's a move. I mean, that is it. Boom, boom. Is it the time to buy IBM? Well, I mean, I can fall back on long-term levels and say, is it time to buy IBM? We've done a lot of work with IBM in the past. I would even go to a yearly and just try to clear this up. Look at that. It's funny, you step back from 10,000 feet and all of a sudden the picture gets pretty damn clear, doesn't it? 50%, I don't like it. A lot of traders love it. Great. 180, 112. Oof. That down in there is where we can do some work. 62%, 180, 112, and you've also got a 13-year EMA down there at 176. That's probably your investment play. Like I said, I'm not an advisor. I can't tell anybody what to do with their money, nor would I. But 181s, could we get it? It's possible. Anything's possible in this world. 210 right there. Interesting. 239. Let's go down to a daily and see how 239 did. There had to have been bidders there. Oh, yeah, look at that. That's where the bidders stepped in. Look at the volume spikes. Boom, boom. And then you get the big rally. So you go right down there from that 38% yearly Fibonacci, and you go right back up to 304. That's beautiful. I mean, that's where the smart money did the work, guys. And then the world ended for IBM, broke beneath that, wiped out everybody there. Could we get short? I wouldn't get short. Short's over. The people that knew about the report, they were short from up here. But this down in here, that probably is going to be where you're going to want to bid, for your long-term play, 181. 181. Let me see. Just in $100 million worth of crypto shorts liquidated in the past 60 minutes. I mean, that's a good sign. CPI, right? Buy in gold. Well, here you go. I don't know, partner. If you guys are buying gold, I don't know. Honestly, This area right in here is extremely suspect. I think if I was doing it, I would be shorting gold. 76, not quite yet. Not quite yet. Let's go back down to our 1 minute. Remember, don't use TPO charts on spot gold. Those are our technicals. There it is. That's the picture. The line in the sand's 4,075. It really is. If you get a selling, if you get sustained selling beneath that zone, potentially you could see that break and break all the way back down there to 40.50. I could see traders taking that play, have their back against 4,100, looking to get this trade down to 4,050. That's not a bad one. That's not a bad one at all. That's not a bad one. 75 is the sticking point, though. I have to tell you, though, the market's going to get ugly under there. If we go beneath 75, it's going to get ugly. All right, let's check in. We had that U.S. tech play. I think it lost. Yep, we got stopped right there. See, that's ridiculous. Perfect stop hunt. Boom, boom, and then went up and got points. Whatever. We're not going to worry about that. 5-minute chart. Really nothing setting up on the 5-minute chart. How about Dell? How about our Dell gap play? We're sort of losing there, aren't we? Stop loss up here. Still looking for that Dell gap. CPI, though, buried us. 75 still hanging in there. All right, Ethereum. Yeah. Let's take a look at Ethereum. Ethereum potential for a long. All right, daily chart broke out to the top side. That's a good range. I mean, you haven't seen that big of a gain in Ethereum since what? Back in early July. Nice big move. What could we say about Ethereum, though? Really brutal market structure, huh? For the bulls. Oof. Boom, boom. Pullback, boom. Bearish. That was interesting. This is a spot area that we had spotted. That 113.85, something like that. Right in that zone. Keep an eye on that one. Spike low. That would be the low from where? 1st of April, 2025. Interesting. Nice big move downward. That's a key support zone, though. So if you do have an opportunity maybe to buy down there, I would say yeah. As far as right now goes, I mean, I don't hate the idea. The real question is what can we do with regards to, trade location? Take it down to a 4-hour chart. Take it down to a 4-hour. Do something like this. Spike low, spike high, pull back. 1830. It's better than buying 1860s, right? I would wait for the pullback. That's an overly extended 4-hour bar. And the reason why is the CPI number. So in my view, that's an artificial bar. I don't put a whole heck of a lot of stock in it. As far as do you want to buy right now? Then we got to take it down to a better time frame. Something more conducive to us getting involved right now. 1850. Yes. That's not bad. 1850. 1846. Not bad at all. That's for sure. Let me see. BH. You can see BH. Gold buy level at 4,075. Stop loss at 4,068. Take profit at 4,090. I like the idea, BH, but we already hit it. We already had it. I mean, it's already done. We already did it. We already did it. Already did it. So, to me, once we've hit it, it's over. It's absolutely over with. But this area right in here, 1850 in Ether, I like that. Euro USD. Yeah, we covered Euro USD a bit earlier, but I'll rehash it for you if you like. 30-minute chart, you see that the trend is up. I wouldn't be messing around with the intraday stuff. We've got an opportunity potentially to trade down from here, and that's a key monthly level. That's sort of what I'm holding out for the rest of the week. I know a lot of you don't trade that way, but that's okay. You guys trade the way that you trade. For me, I look at a lot of markets. 113.54, right around there, 57. That's my buy. That's the one I want this week. Definitely keeping a close eye on that zone. Let me see, working. I'm asking because I think there's a potential of dropping until 1550 for Ethereum. Yeah, I mean, totally dig what you're saying. 1550, I mean, it's going to be right in here somewhere. The key level here that you need to be really watching, the low. That one right there, 2025's low at 1385. That's big. That's big because if you take a look at what happened with Bitcoin beneath that previous year's low right there, that's February, excuse me. Let's go to the yearly. We traded way below the yearly on Bitcoin. So if you do take up Ether you see hasn't broken that cusp yet, that threshold. Very rotational for Ether, but that long-term low, everybody's looking at it. Everybody's looking at last year's lows. So I would expect some algos to be involved down there. Bitcoin, you can see what happened to Bitcoin. So Ethereum is just sort of lagging Bitcoin at this point, but it really isn't because it's lost more of its value as far as a percentage of its value. You were up right around 5,000, and now you're down around 1,800. That's brutal. Bitcoin's lost about 50% of its value. Ether's lost more. So what can we really say about this other than it being rotation? I would be very careful down around last year's low for Ether. That's for sure. Let me see. Okay, we got a couple more here, and then we're going to let's go over to our equities right now. All right, let's go ahead and take a look at our E-mini NASDAQ. Everybody loves the E-mini NASDAQ these days. Every YouTube video, everybody that wants to make a YouTube short sits there and racks up the money trading the NASDAQ, and they think we're not on to them, right? For those of you that have followed us for a long time, this is one of our more popular strategies, 15-minute opening range breakout. I love it. Absolutely love that. That formation right there is fantastic. Spike high there, spike low, love it. Market's flat, really tight range. We've got a fundamental that points to the top side today. We've also just you got to play the waiting game, of course, but we're looking for a breakout outside of those opening two bars. So right there, excuse me, I even marked it wrong, and that happens sometimes when I get in a hurry. 15-minute bar one, bar two. Love it. I like small opening ranges. Love it. Means our risk is going to be low, and the ability to really catch that breakout is going to be pretty good. So we've got room to the top side. We've got room to the downside. The only thing we really want to avoid is getting that big signal bar right now. So look, we're looking to sell on a break and a close beneath this. We're looking to buy on a break and a close above it. That's simple. Let's go ahead and take this over. E-mini S&P 500. Everybody loves the E-mini S&P 500. 15-minute chart. There it is. Good stuff. Love the setup. Love the setup. Absolutely flatlining in the middle of that range. Point of control trade. Is it there? Has shifted. Don't love it. I don't love it like I did, right? Nah, no points of control right now. We wait till later in the day to hit those. But the 15-minute orb is fantastic. Good stuff right there. Nice. Nice and tight. Nice and tight. Let's go ahead. Excuse me. Let's go ahead and take a look at our gold. Gold is, if you're holding longs there, just be forewarned that if 75 goes, this thing's going to plummet. Just be ready for it. This area down in here, highly suspect. Highly suspect. That's for sure. Working. Love the analysis. Thank you. I'll follow you for sure. Yeah, over on Switch Markets on YouTube. That's where we'd love you to follow, but you don't have to follow. Over there, you can follow on any of the channels. That's fine. All the newer content's on Switch Markets on YouTube. Let me see. Darwin, blah, blah, blah. There you go. Well, hey, can't please them all, right? Buy, buy, buy. We already had it. 15-minute orb, beautiful. NASDAQ 15-minute orb, pretty good stuff. I think we're going to trade brewing. What's going on in WTI crude oil futures? I don't like it at all. Daily. Yeah, baby, 77 and a quarter. Would love to get that today. Would love to get it today. We may get it too. We may get it. Let me see. I love Lee. Good to see. I love Lee. Welcome. A lot of new faces today. Will the U.S. dollar continues to weaken? Yeah. Will the U.S. dollar continue to weaken? I think it's possible. I really think it's possible. It's one of those that The CPI number's fake. Let's get that straight. Today's CPI figure's fake. It's not that they lied about the number. It's just that you're comparing it to the big energy bump that we got out of May. So it's fake. It doesn't mean what everybody thinks it means. Now, from a broader perspective, if CPI does continue on this trajectory, let's say you get another one, another low one for July and another low one for August. What do we have? Well, that's a trend. And then we can make the case that, yeah, we shouldn't cut interest or hike interest rates, And then we get back to that rate cut narrative. But as long as the war is going on, U.S.-Iran war and the Strait of Hormuz is closed, it is a real economic problem. Everybody knows it. If this thing stays closed into the fall months, there's no way to run from the inflation. There's no way to run from the recession. It's coming. So knowing that, how do you fight a recession? You cut interest rates. How do you fight inflation? You hike interest rates. So right now, what the Fed is able to do with today's numbers, they're able to buy some time. They don't have to do anything. And that's what everybody's saying in the financial media. So I'm not saying anything new there. But big picture for us, what does that mean for the dollar? As long as the war is raging, the dollar is going to hold its value probably above 100, the DXY. As soon as the war's over, then you're going to have a chance. Then you're going to have a chance for the CPI to come down fast and get into the rate cuts. I think we're going to start cutting interest rates next spring, and when it happens, it's going to happen fast, and it's going to be aggressive and robust. That's what I would say. All right, I love this WTI trade. I really do. Daily pullback zone, 77.25. Yes, please. But it's $2 down the queue. 30-minute chart, WTI, just brutal. Really brutal. We're waiting for a move. We're waiting for a break. You can see right in here, sort of your overnight low. It's just, this is really tough price action. I don't like it at all. You see, we opened low and then we blew high on the news, and now we're just sort of mucking around and filling in. This is when crude can become a real problem for traders. They're trying to pick a direction in this market. They're going long, they're going short, and the problem you run into is there really isn't anywhere to work from. You don't have anywhere to work from. So be careful if you're trading crude oil today. The pullback to the daily is exactly what we want. Exactly what we want. If we get it, then we're in great shape. Gold's, that level's stubborn. You got to hand it down. That level's stubborn. That 75 level is stubborn. So I like it. That shows that we're on the right track there. Let me see Vinman. Good to see you, Vin. Shane, do you hold overnights and futures? No, the margins for holding like full-size crude oil and full-size gold, full-size anything is very serious. It's a lot of money. You can hold the micros, though, the micro E-minis. Futures, you can hold those through the close. Personally, I don't. And the reason why I don't is just the volatility in the action. And honestly, you can certainly do it. Feel free to do it. Just have your stops down. Be very careful, though. You see the futures opens every day. I watch them every day at, 4:15, somewhere in there my time. When those markets reopen, oftentimes they're a lot different than they were. So I don't. No, I think it's a very high-risk thing. The Forex, that's a better one to hold through the overnight. No question about it. Look at this bounce. Man, that level's money in the bank. Let me see. Are we getting any extension at all here? E-mini S&P 500, no. Crude oil wants to open up to the downside. That would be fantastic. E-mini NASDAQ, we have a potential trade there. If we do get the bearish close here in about 6.5 minutes, then we'll look to send them. Then we'll just build a trade accordingly. I really like that trade. I think it's a pretty good one. I don't want to fight the CPI fundamentals, but, if the market comes off and fills in the CPI zone, then we got a really good chance to succeed there. We really do. Let me see. Working. Absolutely. I love Lee. You're welcome. Let me see. Working RPR. How long are you already in the markets and trading? 15 years. Started in 2011. 15 years. It's been sort of in the early years, it was a challenge. It was a challenge because it was sort of on again, off again. I started out with a 7V bar trading group, and I sort of earned my wings there. My uncle was the director, and he was a pit trader. He wasn't a pit trader, but he was an upstairs trader for Shell Oil and Northfield Oil back in the 90s on Wall Street. And he showed me a few things about the markets, and I was very grateful. Worked with 7V bar for a few years. Actually, it was about 18 months. And he ended up passing away. The trading group dissolved. The liquidity was gone. No more trade, no more money. You can't trade. And so that trading group went belly up. I traded prop for a while. Ended up having to get out there and make some money in the world. Went out and worked in the oil fields for a while. Very blue collar. Did a bunch of blue collar stuff, and then got back in the markets for good. Probably, let's see, about 12 years ago now. 11 years. And then I've been pretty much in it ever since. And it's been good. Worked as a financial writer during that period. The live streaming and stuff just came along about 5 years ago. I've been doing this for quite a while. And trading, still trade my own accounts, do some prop stuff from time to time just to have fun. The price on the prop valuations and everything have come down. And the rules, they're actually working with you on the rules. So it's been sort of the golden age for traders. Like if you want to be a trader, you can be a trader. The barriers to entry are very low. When I first started, they were high. You know, that the brokers, you could deposit small amounts, but if you didn't have like at least 50 grand in your account, they wouldn't even talk to you. They wouldn't even talk to you on the phone. So, yeah, that's pretty much my story, man. I've been around for quite a while working, quite a while. Let me see. FaZe Outlaw. Good to see a FaZe. Welcome. Yeah, crypto will most likely bottom in October with 2027 starting the new bull market until 2029. I don't disagree with you, FaZe. I see the U.S. election as being the biggest market driver for crypto. I think that if the Democrats win, it looks like they're going to win the House, potentially win the Senate. If that happens, impeachment day one, we know that. Now, just because you impeach a president doesn't mean it really does anything other than slow down the legislative process. But there will be investigations into Trump's crypto dealings. Pretty much everybody in the cabinet has a lot of those crypto dealings. There's going to be investigations, potentially new regulations, and it could be a real challenging environment for crypto. So it depends on what happens in the election phase, but I do tend to agree with you. I think that crypto is definitely in a holding pattern. I have no desire to buy it right now. None. No desire at all. That's for sure. Let me see. Working. Wow, that's incredible. Yeah, I'm 47 working. I've been around a little bit. All right, so we're still waiting on these opening these orbs. Look at this E-mini. Look at this thing setting up. I mean, this thing, we would love to get just the close right there and then blow out the bottom of that CPI range and maybe turn bearish. That'd be fantastic. That'd be absolutely fantastic. Let's go to the E-mini Dow. All right, E-mini Dow. Interesting, more bullish. Definitely a more bullish orb range. There it is. I like this. We could potentially blow out that CPI top. Always know your ranges, guys, on a news day. Always know your ranges. Right there's your CPI range, 30-minute range. Know where that is at all times. This right up in here, though, could be a nice break. Bullish break. Not a bad orb. We have interesting orbs today. We'll stick with this another couple of minutes and see if we can actually get a trade. This would be, it looks like if it's going to develop, be a sell side. What's the difference between the NASDAQ and these others? The NASDAQ's already taken out the bottom of that CPI range. It's also up. It's the big winner today. I have no problem taking the reversal here. Let me see, working. I've been in the markets for a few years myself. Love asking questions from more experienced traders. That's exactly how I learned working. I had the opportunity to work with or really learn from somebody who'd been in the market 30 plus years, who'd been doing it since the late 80s, mid 80s, and did it on Wall Street, did it remotely. I remember when the satellites just came out. He had a satellite at his house. So it was pretty good stuff there. I used to sit there and watch the data feeds just like a little kid, you know. I was watching the data come in and go, wow, this is like the pulse of the world. I love it. We had another partner in the trading group, too, the 7V Bar trading group that was a pit trader, an old pit trader on the NYMEX. He used to pit trade NYMEX. NYMEX crude oil futures was his bread and butter. And then he was telling me old stories about the coffee pits, being able to trade coffee and how crazy that was. And I was like, man, I wanted to be a pit trader so bad. I did. I was a college athlete. I played baseball, and that competitive nature has served me well my entire life. But I wanted to be in the pits. I wanted to be physically competitive in those pits. And by the time I got out of college, there was no more pits, and they were very small. There was only a few. I believe they were just trading cattle in the pits. Nah, that's not true. There was S&P 500. They were trading in there as well, but the pits were long gone, and that was unfortunate. That was something I really wanted to do. Okay, here's our orb. We're going to light it up. We're going right now on it. Okay, there's our sell E-mini NASDAQ futures, the darling of the internet. Everybody's trading this one. Okay, stop loss is going to be right up above our orb. Take profit. We could definitely be doing something like this. Now, couple of options. That's a 1-to-1 right there. Not bad, right? Not a bad trade. You take the money right now and walk. I mean, it was a breakout trade, no question about it. Or you could bring this right down and sort of take your position there. I wouldn't do that. I would leave it right up above, a few ticks above your orb. And if you hit this trade, then you're going to have a play. 2 contracts rolling. This is a trade that, this is why they trade the NASDAQ on all these YouTube shorts and all this stuff. This is why they trade the E-mini NASDAQ, is because it's a big mover. Like right now, our eyes lit up because we're already up $1,100 or $1,200. A lot of money, guys. A lot of money in the E-mini NASDAQ futures. However, I don't recommend it. This thing moves fast and it moves hot. Look at that swing. We were talking about our gold trade earlier. Take a look at this swing. That's only 2 contracts. That's 2 contracts. Market's coming our way. What do we do now? Look at this. If you're an ICT trader, everybody in the world's looking at that. Let's pull up our TPO chart. Okay. Just broke through the point of control. 3,300. You just passed your I mean, realistically, you just passed your performance evaluation on pretty much any prop firm, and now you got to go do it some more in your PA account or something. But right there, I mean, that was a $3,000 move. Beautiful move. Absolutely beautiful. Now you're starting to see the retracement and watch the orb get dirty on you. Very rarely do these things just break down and get their points. Very rarely. Still, though, rock solid trade to the short. I mean, no question about it. Gold, I got to tell you guys, I would, if you're holding gold longs, I'm pulling for you, but I don't like it. Yeah, here we go, baby. This is it. Here we go. Look out. Look at this. Not great trade entry. Not great trade location. No question. Why would it be a limit order? We don't want limit. Market, just send them. Not good trade location. We're looking for a break right down into here somewhere. Where would your stop loss be? That's where life gets tough. You could put your stop loss right here or right above that swing high. Essentially, that's your 1-to-1. These are big trades. These are really big trades. That's only 2 contracts. I trade 2 contracts in gold. That's only 2 lots. That's a lot of money. That's a lot of money. So, you know, it just depends on what you want to do, how you want to do it. Look at this. Look at this beauty. Look at that beauty. Now you've got a long, potentially a long entry on the YM. Look at that resistance right there. This is something you can do, though, with the orb, 15-minute orb. Look at this. 50% rule. We made videos on this all over How to Trade Calm on YouTube. What could we do here? 50% order buy limit right there. Called the 50% rule. Now, the beauty of this kind of trade, for sure, is your stop loss is a hell of a lot smaller. Right there. Take profit. You could put right up here, maybe a new high. This would be one where potentially you could shoot for a 1-to-2. 53,000. Or bring it down to a 1-to-1. Whatever you need. Lots of opportunities today, guys. Lots of opportunities today. Let's see. Gold. What's happening to gold? This break in symmetry guy. 75 is the big level in spot gold. 75 is it. We're coming off. That's going to come off and fill in. I would think that that's going to be the way forward. All right, NASDAQ, E-mini NASDAQ. Look how fast fortunes change, right? Look how fast fortunes change. That's why it's up to you what you do with these trades. I mean, take profit. That would have been a really tough one not to take right there because it was so easy. Now the market's rotating back up into the guts. You can see gold's in rotation. YM is sort of in rotation. WTI crude is flat. Keep an eye out. Be ready for your moves. You'll get them later in the day, more than likely. Another half hour or so, another hour, you'll get them. All right, guys, I'm going to go ahead and sign off. I've been going forever. Let's see, working RPR, trade coffee futures. The guy said the market was thin. He said the market was thin, so it was just insane. But they were making so much money in the pits. So a good pit trader back then in the NYMEX. I mean, the gentleman told me the story a bunch of times. He said, listen, I used to show up in January with $100,000, and I went over $2 million a few times by taking the money from January all the way to December, pulling out at the end of the year, $1 million, $2 million, $1.5 million. That's a pretty good living just for some working class folks that just knew how to trade. These weren't fund managers. These weren't Goldman & Sachs, that's for sure. These were people like you and me that got in there and got to trade and loved to trade. That's what the difference was. That's for sure. Let me see. Sell the NAS, boys. It's not looking as good as it was a minute ago. That's for sure. Above the red candle. Yeah, that's where you want to put it. You just ride this range out and see exactly what happens. Big trades. Yeah, I don't trade that kind of size. Well, I mean, that's not true. If I'm rocking a prop account or something, yeah. I have been known to trade 3 and 4 lots on full-size gold, though. That's something that is very specific, though, and very delicate. I mean, you're like a brain surgeon doing that. That's for sure. But the swings can be big. Remember what we talked about earlier today about the swings in that gold trade. It's not the losses that get you, it's the swings. So right now, the swing on this NASDAQ trade could be just massive. Now you're down $650, and we were just up $3,500 a minute ago. It's tough. 2,000%. Well, that's the difference working. I mean, this guy wasn't a liar. He still was living off of that money 20-something years later. And what you have to understand is going in and making that kind of return, it's business as usual. You're just showing up doing business. They weren't even thinking about losing. They were winning every single day. When they lost, it was like, no big deal. It's the reality of it. So, when you start to really think about what trading is for us, we're sort of used to losing. Realistically, sort of used to losing. Have to manage the losses like this gold. Like taking a market entry like that on gold was stupid. I still like it to fill in, but now it's moving against you, and you got a problem. You sort of got a problem there. So when you're making, 100,000, I mean, realistically, these guys are making $100,000 a month. When you're making that kind of money, taking a $5,000 hit doesn't really matter. But they had it on lock. They had it dialed down. And with the problem with the pit trading is once it went away, a lot of those guys couldn't make it in front of the screen. All right, everybody, I'm going to go ahead and sign off. That's enough for me today. We went long enough. What, about 2 hours? Fun session, though. Had a lot of fun. Met a lot of you. A lot of new faces here. Remember, if you need anywhere to trade, head on over to Switch Markets. It's going to be pretty good outlet for you if you're looking for your CFD and Forex market access. If you want to send me a private message, be sure to head on over to howtotrade.com. I'm the head trading coach over there. You can click on my picture, send me a private message. Tell me, ask me a question, say hi, tell me what you think of the streams, what you think of my shirt, whatever. I don't care. Just reach out and say hi. Trading can be a lonely endeavor. So you want to do the best you can to be a part of a community. We have a pretty good community over at How to Trade. Tons of educational material. We do these daily live streams. These are all over YouTube and X and things. So definitely you can catch me pretty much every day live. Cover the big events. The rest of this week I'll be going at 1 p.m. Eastern, which pretty much is after the fact. But we'll be trading. We'll be getting in there and trading some market profile stuff and some TPO charts. I like the futures. That's what I trade, but we're also going to be focused on the Forex because a lot of you really trade the Forex. And right now, I'm watching XEU USD, and that 4,075 level, that's a monster. That's a monster. Bumped it right back up to 79, 4,080. We probably could have made a year's wages just scalping 4,075. That's for sure. All right, guys. Absolutely, Eli. You're welcome. You're right working. Sure glad to meet you guys. I'm going to go ahead and sign off for right this minute. I'll be back tomorrow. Same time. Not the same time as today, but we'll be back at 1 p.m. Eastern tomorrow. A lot of news. We'll be covering a lot of news tomorrow because that's what's happening in the world right now. Key level I'm looking at for WTI crude oil futures bid late in the day is going to be about 77.35-ish. Maybe 77.40, maybe even 77.50. I want to get long that market, but it's got to move first. Right now we're watching gold. Gold's starting to trade down a little bit, definitely in big-time consolidation. E-mini NASDAQ sort of rotated back up into that range and rejected it. Should be interesting. And then the YM sort of holding right up towards the top of that CPI number. These trades are all pretty good ones. We did fairly well today. Not too bad. All right, everybody, that's a wrap for me. Have a fantastic session. Have a better week. And as always, trade the action well, and we'll talk soon. See ya. Traders all over the world are already using switch markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, switch markets. Let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way, you're not trading alone. There's a whole community of traders tuning in daily, sharing ideas, watching the markets together, right here on the Switch Markets YouTube channel. If you want to be a part of it, subscribe and tune in daily. I'm here to answer your questions live.
Time moves in a constant rhythm. Every second counts. Every decision carries weight. In trading, the cycle never stops. Opportunities appear, they disappear. Sometimes before I'm ready. Even when I step away, the market keeps moving. What if I'm wrong? What if I miss? What if this one turns against me? Every chart I've ever studied, every level I've marked, every rule I've committed to, all of it comes down to one moment. Executed with clarity, without hesitation. Because control is choice. And in that moment, control becomes edge. Switch markets. Trade with discipline.
If you're already trading, why settle for average? Switch Markets is raising the bar. Tools, resources, dedicated live support. It's time to make the switch to Switch Markets. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss